Hi guys, welcome back to the channel. My name is Dave, and today I want to talk about TLT, which is the iShares 20+ year bond ETF, Treasury bonds. Pretty exciting stuff. Now I have talked about this one before, and I'll link that video up above. We also talked about TLTW, which is the buy right version of TLT. That offers a higher yield, not necessarily better performance, make sure you understand the difference, but it does offer a higher yield. Now, I think I could beat the pants off of that sucker, so I just like to wheel TLT myself, and I'll show you how I do that today. If that is what you're looking for, please stick around. Whoop. So last week we talked about an ETF from SPYI ETFs called HEQT or HIGH. Now this was an interesting option for those looking for some extra income. And what they did is they went out and they bought T-bills, and then they had an option strategy overlaid on top of that. So if you think about that strategy versus TLT, that's short duration T-bills. So if you went out and you bought $1,000 worth of T-bills, maybe it pays you $5 a month. You take your $5 at the end of the month, you still have $1,000. And that's one of the reasons that with those short duration T-bills, you're not going to see much fluctuation in the price. It's right around $25 a share, and it's going to stay there. A little bit higher, a little bit lower, drifting a little bit. But in general, it's not going to move a lot. Now, the option overlay might affect the price a little bit in a down month, in a really bad month. But in general, that's just going to add some yield or take away some yield. So that should stay at right around $25 a share. And I get asked that question a lot. So I wanted to clarify that and also tie it in with how that is different to TLT. So with TLT, we have a totally different animal because we have duration exposure. On average, the bonds in TLT will mature in about 26 years. That's very different than the T-bills in HEQT. So that's one of the reasons if you look at a chart right now and you go back 3 years ago, it was up to almost $170 a share. And that's one of the reasons why it sits now at $91 a share. Interest rates have been on the rise. New bonds coming out are paying more. That's making the old ugly bonds in TLT not look so attractive, driving the price down. That's the main driver. So you have to ask yourself, where are we at in this cycle now? So do you believe that higher for longer will last? And do you believe that we will continue to raise interest rates? Or do you feel like we're coming to the end of that cycle? I believe we're getting close enough that I'm willing to start wheeling TLT options in this case. Selling puts, and then if it gets assigned to me, selling calls against it to generate income on top of the fact that it's yielding now a decent amount. And for those that are not familiar with the wheel strategy, I will link a video up above. But with TLT right now at $91.43, we might start this process by offering to buy 100 shares at $89 a share. So I will do that. When I do that, I can collect a premium. Let's say it's $100. I put that in my pocket and I'm off. Let's say I do that out 2, 3, or 4 weeks from now. And as time rolls by, let's say TLT starts to drop down towards that $89 strike price. I still have an option. It's called rolling. I can roll that option out. I can go out another 2, 3, 4, 5 weeks into a lower strike. Again, collect another premium, probably not as substantial, at a lower price. If it continues to drop, I can continue this process, but my return will become probably less and less until I finally take assignment of that first 100 shares. Now, I want to have more money available, and by the way, 100 shares would be about $8,900 in that case. So understand what you're getting yourself into. But if you have some capital to put towards this, you can continue to average down with this. And meanwhile, as you're collecting shares, we're going to start trading the wheel, which means we're going to start selling calls against this, meaning offering to sell it for the price we had it assigned to us in the first place or at a higher price. So this is the way we're going to collect income, and this is the way the wheel moves around as we talk about the wheel strategy. So that'll be the idea in this particular trade. And don't forget, we have that base income level just like HEQT, right? We either have our money in cash, in my case, in a money market at Fidelity, and I'm earning income off of that, or I buy shares in TLT and I get my monthly income from that yield at TLT. So I have that base, and on top of it, I'm trying to layer some option income. And if I can get to that 10 or 12% return, then this is a good trade for me. That's kind of my goal with this money. Does that work for you? TLT comes to us from iShares or BlackRock. It's a 20+ year Treasury bond ETF, and you look at the holdings, that's all you're going to find, long-term Treasuries. Very exciting stuff. Expense ratio is 0.15%, reasonable, pays every single month. The current yield is around 3.5%, but if you look at the last distribution, it's about 3.8% if you annualize that. This will continue to rise. Think about new bonds being issued right now, 20, 30 year, around 4.5% as those get added to TLT. It's going to drive the yield up. Old bonds fall off Assets under management, $38 billion currently. So pretty large fund. And the 1-year performance, you can see down 13.5% or 13.15%. So it hasn't been kind as interest rates have been on the rise and new bonds are being issued at higher rates. And if we go all the way out to a maximum here, we're going to see, we can go back to the early 2000s and we were all the way down to around $80 a share. All right, and we went all the way up to about $170 a share. And now we're back down to 91. So will we see the 80s or 70s? Likely we could see the 80s and 70s. But I feel like my strategy is going to be able to compensate for that. So that's why I'm going to start wheeling more TLT shares. I think that I can do okay with this type of trade. And we can also look at the historical dividend yield for TLT, and we're going out to a 10-year time frame here, going all the way back to 2013, where we got up to about 3.25%. It's been drifting lower ever since, all the way down to about 1.5%. Yikes. Now you can see we're sharply up recently, all the way up to about 3.5%. Headed towards 4% maybe. We shall see. So with that said, I've started my process of committing some funds to this idea of wheeling TLT shares. So I already have 100 shares. So I was the recipient of having an assignment this week. That can happen, so be prepared. That's what you see up here. My plan was to, I had a put outstanding at a $96 strike price. My plan was on Thursday to roll it out to a lower strike price out a few months. Avoid holding those shares. Again, it's like a hot potato. I want to throw back at them. But before I could do that, after the FOMC meeting, I did take assignment of 100 shares. So it can happen. You can see my average cost basis here is $95.44. I've already sold a call against it, so my break even's probably $94.50 or so. But again, we're down to $91.43. So I have realized a loss in these first 100 shares. Again, I'm going to sell that call after receiving these at that same $96 strike price and continue to average down as necessary. But just to show you some examples of some different trades I'm in here, my list is very long. This is just a couple currently, but these are some that are coming up with expirations not too far out, right? This coming week, so September 29th. So in this case, I've got an $87 put. This is 8 purchase contracts. Kind of have a ratio spread here, not quite, but and then I've got $91 strike price, so 91 to 87. Okay, so these are my sold puts. These are my purchase puts. In this case, I did 10 to 8. So I'm willing to take on a couple hundred shares here again, just as an example to show you that I'm doing this from spread perspective, and I'm also doing just some cash secured puts as well. That's kind of what you see down here is my next line here, where I did that earlier back on 9.5. I sold that one for $48. Glamorous money, I know. So setting up these different positions and going to continue to roll these down. So again, I have lots and lots of contracts open. I'm just showing you a few different examples and how I'm tackling this. And then I've got another one here for TLT, a $92 put that I sold for September 29th. In this case, I opened this up back on 8/17. So you see this one was worth a little bit more, $161. So actually, this has value right now. We'll see where we're headed since we're already below our $92 strike price. So just some examples to whet the appetite. But one of the reasons that I feel comfortable with this type of trade is because there is some volatility in TLT that you can trade against. So when you do take on shares, you do have the ability to sell these out. There's lots of expiration dates, and you can roll these out pretty far into the future and do all right. So I'll show you an example of that now as well. So just to illustrate an example here, let's suppose with TLT at $91.43, you were the buyer of TLT shares at 100, or you took assignment at $100 a share. Can you still generate a nice premium at a $100 strike price? So here's just an example and the thought process. Again, it's going to help if you have the ability to buy 100, 200, 300, 400 shares and average down if the thing continues to decline. And that's my plan. I'm willing to commit more funds to this. But in this case with TLT at 91.43, if we sell to open one call contract going out till January of next year with a $100 strike price, we're going to be able to generate around $83 market price currently. And that annualized, I ran the numbers, is around 2.8% annualized return. So combine that with the 3.8% distribution yield we're currently seeing that might head towards 4% soon. And we're looking at something like 6.8%, really 6.5% to 7% currently. That's probably what you could get being that far out of the money, which is, over 9% out of the money. So that's one of the things with that kind of volatility. I think that I can commit some funds to this, and overall, I'm going to be able to wheel this pretty successfully and put a lot of money in my pocket with a target goal, maybe around that 12% return overall, whether I'm in cash or I'm in TLT with the addition of that option income. Again, that is just my thought process and how I'm approaching this. I'd love to hear your opinion. Let me know down in the comments. So similar to HIGH, I believe that this base income that I'm going to be getting from having my money in cash or my money in TLT plus the option income will offer a nice return for me going forward. Now, if you have any questions on any of this, please ask down below. I really appreciate you watching. Like and subscribe if you like this type of content, and we'll see you next time. Have a great night. Take care. Whoop.